In the last year, AvidXchange has processed more than 53 million transactions, representing more than $145 billion of gross merchandise value. They are players in the digital payments arena, and in today's video, we're breaking down their $4 billion IPO, the bull and the bear case for the equity, and the very stiff competition that they face. Stay with us.
I'm Hannah, this is Aaron, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. That's longer than I've been alive. Make sure you stick around until later in the video so you can hear more about how JetStore can help you with your data storage and cloud management.
AvidXchange, the subject of today's video, isn't quite 26 years old, Hannah, but they are 21 years old. Pretty well established in the spectrum of companies that go public these days. They are aiming to raise more than $550 million in their forthcoming IPO and achieve a valuation north of $4.7 billion. Doll hairs. That would be more than $23 a share for a company that manages B2B payments. They're small, and when I say small, there's only a couple products in the suite, and they are all around invoice management and the back end. Think about an accounting department, the manual, rote, repetitive tasks that would be better executed, more cheaply executed, more quickly executed by software. They have been around, like I said, for 21 years, based out of Charlotte, North Carolina, and still have their founder CEO at the helm. Wow. Michael Prager, who co-founded the company, is still the CEO and president. They have more than 5,500 customers, and with this valuation would have an enterprise value to revenue ratio of 17.8, which is pretty much right in the gravy zone, right in the...
The gravy zone. The
gravy zone of B2B SaaS. Super high for other companies, like ones we've covered in the past, that are predicated on a lower margin business. But AvidXchange is mostly selling software. They've also raised $842 million in total from the private markets, most recently in April of 2020 at a valuation of just $2 billion. So those investors are more than doubling their money in just over a year. Some of those private investors include Mastercard, Bain Capital, and Quebec's public pension fund. But the thing that annoys me, this is one of those little tropes, if you're someone who finds yourself reading all these investment announcement type of blog posts, there's a kind of collection of characters that they know get clicks, they know
really
get people all hot and bothered. Yeah. They put this as a Peter Thiel-backed company. When there's a little bit of money from Founders Fund, and he's not even necessarily involved in every single investment that they make. Just silly to me that that is how something like this is positioned when some of the biggest shareholders are Mastercard, Bain, and Quebec's pension fund.
That's kind of ridiculous. I don't know. I guess
Peter Thiel roused emotion in you, or not really?
Not really.
So he'd be like a 3 on the meme factor for you.
Definitely.
He'd be much higher for me. Revenue is growing, although not particularly quickly as one would expect with a 21-year-old company. $149 million in 2019. $186 million in 2020, and in just the first 6 months of 2021, $114 billion. That is 24% growth 19 to 20, and on pace for growth north of 30% going into 2021. Unfortunately, while they are growing, they are also losing oodles of money. Oodles of it.
I knew it couldn't have been that good.
Oodles and oodles. Give them a noodle.
An oodle.
2019, they lost $93 million. 2020, they lost $101 million. Oof. And already in the first 6 months of 2021, lost $92 million. They are doing this, and there's 2 metrics here that should raise some red flags.
Okay.
102% net transaction retention rate. We talk often about net revenue retention with B2B SaaS companies as the primary factor in which they are capable of turning dollars from their customers 1 year into more money in the subsequent year. More than 120% is good, more than 130% is great, more than 140% is world-class, best in class. This is a company that is struggling to stay above just the 100% mark, meaning that a meaningful portion of their customers are churning off of the platform and or not growing at all once they have implemented the software. Puts a cap to some degree on the value of those customers relative to other customers for other companies. And then in conjunction with that, the other thing, you pair these two together and we see something of a relatively troubling picture for a B2B SaaS company. You know we love B2B SaaS on this show.
Hell yeah.
A 1.0 to 0.8 sales and marketing efficiency rate. So what that number means is $1 in to the sales and marketing machine that they've built, the apparatus, that department of the company, how many dollars or how much money does that turn into on a revenue basis when they allocate that money into their sales and marketing department? A great company would look something like 2x or 3x because their sales and marketing is so efficient that just $1 turns into $2 or $3 that same year. Unfortunately, that is not the case with AvidXchange. They are struggling to just maintain a dollar for dollar average. And in order to fund that growth, in order to manage that net loss that they've had over the last couple of years, they have taken on more than $900 million worth of liabilities.
Ouch. I would never want to be in that position myself, let me tell you. Well, let's move on to the comps, where we take a look at some comparable companies and competitors for the company that we're covering here on the rundown today. It's very helpful when you're looking to invest in a company to get a feel for the surrounding business landscape. So Aaron, tell us about the comps.
If you watch this show with regularity and you're a regular subscriber because you have a big business brain, you know that we love B2B SaaS. We are not the only people out there that have recognized the B2B SaaS opportunity. And so the low-hanging fruit, the most attractive arenas of B2B SaaS are rife with competition. B2B payments, B2B invoicing might be just around the very top of the heap in terms of venture investors and startup founders licking their lips, fantasizing about controlling the payment infrastructure for large businesses. So this is a very competitive space. We're going to start with a couple of the relatively newer entrants that have not yet entered the public markets. Ramp, who we've done a video on before, Brex, who has a valuation north of $7.4 billion, and Tripalti, which is valued at $2 billion in private markets, are all competitors to what AvidXchange is doing, allowing the software for the finance department to operate well and the payments to be processed. Then there is a whole collection of publicly traded companies, including Bill.com with a $26.5 billion valuation, Coupa with a $16.5 billion valuation, Square with a $110 billion valuation, and Intuit, which runs QuickBooks, with a $145 billion market cap. So there are a lot of players in this space. Also, it is a very, very large market and one that is growing. More and more payments are being moved from analog to digital, and no company better represents that than what would likely be the crown jewel of the next 2 years in terms of IPOs, Stripe, which was most recently valued in private markets at a $95 billion market cap. In general, it would be hard for me, with my limited technical acumen, to speak to AvidXchange having substantial technical advantages on some of these substantially larger, better funded, and younger companies. Another thing that the older technology companies always have to deal with is the concept of technical debt, where what was used to build something 10, 15, 20 years ago that was likely not the most modern model for executing a process is now a legacy part of the system that has to be ripped out and re-engineered in order to operate in the most modern way. That's what an older software company like this will face, along with some very stiff competition.
Damn, son. All right, on to the meme factor. If you are unfamiliar with the meme factor here on the Piper Rundown, it is where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being extremely negative memes, 3 is completely neutral, you feel nothing when you think of this company, and 5 is hella memes, dank memes, ultimate memes. I think my meme factor score is pretty neutral for this one. I know they're trying to crank up the sex appeal with the Peter Thiel backed, all that jazz, but I don't know. I am going to go 3.2 because it's a company that's been around for the longest time. Very impressive that the CEO is still at the helm, but it's just not a super sexy company overall.
I think that, so I'm giving it a 2.4, and that's because I think that they face real meme headwinds with the other players in the space. All they've really got is Peter Thiel. B2B invoicing is particularly attractive. A tool for the accounting department. I was watching a TikTok the other day where it's literally like, tell people you work in the accounting department, they don't ask you any more questions about what you do. And it's like, shout out to our accountants out there. We need you, you're important, but it is not something that gets people going. So I think that there's a natural headwind in which if anyone started to care about payments, they're going to immediately jump to Square and Stripe and maybe Bill.com before this.
Yeah, that's totally fair. Before we move on to the bull and the bear case, let's hear about our sponsor, JetStore, one more time. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and even flight simulations.
Sheesh.
Sheesh, my guy. That's a lot of stuff that they can help you with. Make sure you check out jetstore.com for more information. Thank you, as always, for sponsoring the rundown. On to the bull and the bear case.
The bull case comes down to the jaw-droppingly enormous market for digital payments in all forms. Consumer payments, B2B payments. Money is being sent across digital rails with a staggeringly large rate of growth. Estimates by some of the large investment banks suggest that the market for digital payments could have a CAGR, which is the compound annual growth rate, of more than 9%. Now there's a classic rule, the 7-10 rule, is if you are growing at 7%, you will double your value in 10 years. And if you're growing at 10%, you'll double your value in 7 years. So that's always a model that I have, is how quickly is this thing doubling in size? At 9%, we are doubling the market for digital payments before the end of this decade. Doubling something that is already fantastically large and supports multiple $100 billion companies.
Crazy.
So even if you are in such a large, if you're in an enormous market that is as fragmented as this is, even if you are not the belle of the ball, you have an absolutely roaring wind at your back. It really requires operational negligence to completely drop the ball as a company in this space. That to me is the starting point of the bull case here, and married to the fact that it is not the sexy player. Every tech bro is excited about Stripe. Everyone who is in any way, shape, or form in touch with culture understands that Square is like making some interesting moves. No one feels that way about AvidXchange. So you're basically getting to play in this space of enormous secular tailwinds without hype.
Wow. It's a pretty strong bull case. Damn.
My bear case is that they can't break even after being more than 20 years old with those advantages.
Yeah, that's tough.
That is troubling. And they're not close to breaking even. It's not like they're, even trending in the right direction. They're on pace to have their biggest loss ever this year.
Ouch.
In order to grow. And the likelihood that any rate of growth could continue without this degree of burn is very skeptical because of the poor sales and marketing efficiency rate. So I don't know, the competition is fierce and they don't seem to have anything resembling operational excellence.
Man, that one hurts. But try to deliver both sides here on the rundown in a completely unbiased way.
If you think we were biased, let us know in the comments.
Let us know in the comments, but we want you to expand your business brain. And if you've watched this far, thank you. We hope you did so.
Slam that subscribe button.
Slam it. We'd like to shout out one of our viewers from a past video. Erwin said, "I'm a fan, love your work, it's insightful, you're not a sellout, and the production quality is awesome. Just thought you should know."
At what point do you think we will sell out?
I don't know. It depends on what we're selling out for.
What would you sell out for?
Maybe
a yacht.
Something way smaller than a yacht. Wow. I don't know. Give me your best offer. That's a rundown.